Hey there, Dan Fitzpatrick here, stockmarketmentor.com, and I'm looking at American Eagle Outfitters, AEO. They report earnings tomorrow, and we're going to find out how much Sydney Sweeney's awesome jeans are going to help the stock after the earnings announcement. Like they've sure helped it a lot recently, but we'll look at the daily chart in a sec. But you look on the weekly chart, and we can see this from this last high down to here. This is $6, a little over $6, but it's 30%. So if we just kind of use a measured move using this as a breakout, and by the way, I'm going to cough a few times here because I'm sick, but you're going to have to forgive me. Anyway, so if we use this as the breakout point, then we've got a 30% pullback. So we can look for maybe a 30% gain. We'll say right up at 26.50, something like that on a pure measured move. And that's really what you do is you just say, okay, how much can the stock go in a breakout? Go back, look at what the prior range was, add that range to whatever the breakout level is, and then assume that the stock is going to run to there. Now, it certainly doesn't mean that it's going to, but when you're using this type of a simple calculation, it can give you a sense of potential reward versus the risk. So anyway, so that's what I'm looking at now. Now, as I see this stock again, it's on the weekly chart. We'll say $20 is really where support is because that was prior resistance. So you wouldn't expect this stock to fall below $20, right? Hey, prior resistance, once broken, becomes new support. That's the rule. However, rules, I don't think they're made to be broken. They're made to be followed, but I should say they're made to be paid attention to because this isn't a rule. It's just kind of a typical rule of thumb. But you can't look at any time a stock just kind of penetrates up against resistance and through resistance. Oh, okay, it's never going to come back. That's what stupid people do, and I don't want you to be one of them. So let's just say the stock can do anything it wants. But what I want to do, like you can see how just all over the map this thing is. The last earnings report was 45 cents, 45 cents a share, which the prior quarter here was minus 29. So they were losing money here, unless I'm reading this wrong, and I don't think I am. I'm going to have to pause this for a second. I thought so. Yes, they actually did lose money this quarter. So that kind of put them in a great position for a turnaround, which is what they did. So here's the thing. Again, earnings here were 49 cents. The estimates for this quarter are 43 to 44 cents. So they're certainly not anticipating any big move up for whatever reason. So, and again, in case I forgot to mention it, they report after the bell tomorrow. So you have time to kind of look at this stock and see if you want to do anything. Now, this is what I wanted to show you though. If we look at this on the daily chart, you get a real sense of what's going on here. It came out of a volatility squeeze down here, and then it screamed up here on heavier than average volume. We'll raise that up here. So you can see a little bit higher than average volume. The most was the prior day. Then today was big time volume, right? So what are we going to do? What are we going to do with this now? This is, if it wasn't for earnings on this, I would say this is how you trade this. It's walking along the upper band for that's 1, 2, 3, 4, 5, 6 days in a row. This is closed up above the upper Bollinger Band. And you can say, oh my gosh, that's a sell signal. You got to get out. That's not really true. I mean, a stock that performs this well will ultimately reverse, and it'll hurt those who got in right at the top. But the way this thing's running, it doesn't give you the sense that it's the top. The volume continues to increase. Here, let me get better scale here. The volume continues to increase. So this reflects institutional buying. This stock is working really, really well. Like, don't we wish that we'd popped in here right around here at this breakout point, right? So I think the stock can continue to run as long as the market has a positive response to earnings. Pending cough. Sorry about that. Um, I'm not going to edit that out because this is spontaneous stuff I do. But here's the thing. You can say, well, what are these lines? Okay, these lines are implied move. The implied move, the move implied by the option market, which is calculated by the price of a straddle, what the at the money call and puts are selling for. You add them together, and there you go. So it's about $2.95, which takes the maximum upside move to 24.20 and the maximum downside move down to 18.30. So what we're talking about here is this stock, if the options market is correct, this stock should stay within this box after they report earnings. So frankly, this is your risk. You know, you've got a $3 risk, you got about a $15 risk on the downside if you just buy the stock and think it's going to be awesome. But you've also got, if you're going to use this approach, then you've also got like the same reward. If you're assuming that this stock's going to stay in the box, then you're risking 1 for 1. You're risking a buck to make a buck. That is not a good risk reward ratio, at least in my book. So the best way to do this, frankly, there's a different trade here, a much different trade. And that is to wait and see what the stock does in response to earnings. If earnings are awesome, then this is your line in the sand, 24.20. If the stock happens to gap out above that, don't buy it. The mathematics of options are virtually guaranteed to pull this stock back inside the box. That's just the way this works. And so if you get a big gap up, you actually want to be selling into that. Now, on the other hand, if you get a big gap down, hey, it just so happens that this implied move to the downside is right around the 20-day moving average. And so in this case, and wouldn't it be nice if it did this? In this case, if the stock falls and it falls to about 1850, maybe 1840, something like that, that is the time for you to buy this stock because, again, it does have institutional sponsorship. This is a big move today. Somebody's getting positioned before earnings, and you can be a part of it. Just remember that a stock will gap up over earnings or gap down over earnings. For you to say, oh, well, I'll just put my stop right here, that doesn't mean that you're going to get out here. If the stock, you buy it at 21.25 and you put your stop at 20.25, that doesn't help you if the stock gaps down to 1877. That's where you're going to get filled. So you need to understand the mechanics of how stocks trade over earnings, particularly these implied moves. This will make you I was going to say a shitload of money, but I'm not going to say that. It's a family show. This will make you a crap load of money if you understand how these stocks trade over earnings. And by the way, as I mentioned that, I've got a special on the 59-minute trader course that you may, if you haven't been in this course, if you haven't figured this thing out, you really, really need to. If you learn how to trade the opening rotation, these kind of moves can really just be money in the bank for you. So we've been marketing it for a while. So I'm just going to remind you here, if you just go to the homepage, you got to be logged out to see it. If you're a member, you already know about all this stuff. You probably picked this up already because this has been the most popular marketing campaign that I've done in ages, which tells me that you know what people really want right now? They want instant gratification. They want to make money like right now. And this is a course for you to do it. Well, maybe not right now, but within the first hour of the market is when you make money. So you can just go here, click on Unlock Your Potential, and then you'll see a good-looking guy right there, and I'll explain the whole thing to you. So anyway, that's that. It's either yours or it's not. And I will see you guys next time, okay? Hope you all are doing well. you had a good Thanksgiving, and I know I did.